Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Wednesday, March 4th, 2026, and we have a lot to cover today. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the dominant story continues to be the Iran-US conflict and its ripple effects across global markets. We're seeing some serious volatility, particularly in Asian markets, where South Korean stocks took their biggest one-day hit since 2008, dropping 12%. That's a massive move that really underscores how sensitive certain markets are to geopolitical risk right now. At the same time, oil prices are rallying back to multi-month highs as supply disruptions from the conflict continue. Goldman Sachs is even suggesting we could see oil hit $100 if volumes from key passageways don't ramp up soon. What's interesting, though, is how selectively this fear is playing out. We're also seeing Iran delaying the state funeral for their deceased supreme leader, which adds another layer of uncertainty to an already tense situation. On a different note, there's positive movement in the crypto space, with Kraken becoming the first crypto firm to win access to the Fed's core payment system, which is a significant regulatory milestone. We're also seeing continued inflows into Bitcoin ETFs, despite the geopolitical risks, with over $225 million added recently, though BlackRock's IBIT had to offset some redemptions.
That's quite a mixed picture. The fact that South Korea got hit so hard, while other markets showed more resilience, is notable. What does this mean for traders navigating these conditions?
The key takeaway is that this is a market demanding selectivity and risk management. Traders need to be watching oil prices closely because that's your real-time barometer of how serious the market thinks this conflict is. If oil continues pushing toward that $100 level, you're going to see broader pressure on equities, particularly in sectors sensitive to energy costs. The defensive plays are obviously energy stocks and gold, which is also rallying. But what's really interesting is Bitcoin's resilience here. Despite Ray Dalio coming out and saying there is only one gold, Bitcoin has been holding up relatively well, climbing above $71,000. The spot ETF inflows tell you that institutional money is still viewing Bitcoin as a viable hedge, even if it's not behaving exactly like traditional safe havens. For active traders, the volatility in Asian markets presents opportunities, but you need to be nimble. South Korea's 12% drop is the kind of move that creates both panic selling and potential bounce back plays, but timing is everything. The broader message is to stay defensive, watch your position sizes, and don't fight the trend in energy and commodities right now.
That selectivity is going to be key in this environment. Steve, let's get into the economic numbers. What's the picture looking like this week?
Thanks, Robert. Earlier this week on Monday, we got the ISM manufacturing PMI, which came in at 52.4, slightly above the forecast of 51.8, but down from the previous reading of 52.6. That's still in expansion territory above 50, so manufacturing is holding up reasonably well despite the geopolitical tensions. Now, today we're getting the ADP employment report, which is always watched closely as a preview of Friday's non-farm payrolls. The forecast is for 50,000 jobs added in the private sector, which would be a significant improvement from the previous reading of 22,000. This report has been somewhat volatile lately, with February's actual coming in at just 22,000 against a forecast of 48,000, so there's been consistent underperformance. If we see another miss today, that's going to raise concerns about the labor market softening more than expected, which could shift expectations around Fed policy. A stronger number closer to or above the 50,000 forecast would ease some of those concerns and suggest the labor market is stabilizing after a weak start to the year. Looking ahead to the rest of the week, tomorrow we'll get initial jobless claims, which will give us another real-time read on labor market conditions. Then Friday is the big one with non-farm payrolls, where the forecast is for 60,000 jobs added up from the previous reading of 130,000. We're also getting retail sales on Friday with a forecast of 0.3% growth, which will tell us whether consumers are still spending despite all the uncertainty. The labor market data is really the focal point this week, and if we see weakness across ADP claims and NFP, that's going to fuel speculation about potential Fed rate cuts later this year.
Those employment numbers are definitely going to set the tone for the rest of the week. Lizzie, let's shift to crypto. What are you seeing in terms of trends for Bitcoin, Ethereum, and Solana?
The crypto market is showing some interesting divergence right now. Bitcoin is clearly the standout performer, displaying that resilience we talked about earlier. It's pushed above $71,000 and is approaching $72,000, which is significant because it's holding up even as traditional risk assets are getting hammered. The narrative around Bitcoin as a store of value is getting reinforced, and there's actually a recent study showing that AI models overwhelmingly prefer Bitcoin over fiat currencies as a store of value, which is a fascinating data point. On the institutional side, we're seeing continued ETF inflows with over $1 billion flowing in over the past 5 days, and that's despite the geopolitical chaos. The sentiment is bullish, though. There are some cautionary voices like Ray Dalio questioning whether Bitcoin can really compete with gold. The key level to watch is that 72,000 resistance. If Bitcoin breaks through cleanly, we could see a push toward new highs. Ethereum is in a more neutral position, honestly showing some bearish tendencies. It slipped below $2,000 during the recent sell-off, though Ether supply on exchanges has dropped to multi-year lows, which is typically a bullish signal because it means less selling pressure. The challenge for Ethereum is that it's not getting the same safe haven bid that Bitcoin is enjoying. Vitalik Buterin has been defending Ethereum's neutrality amid calls for more political engagement, but the price action suggests the market is less convinced about ETH as a hedge right now. Solana is the weakest of the three and frankly looks bearish. There's talk about Sol potentially repeating the 95% crash we saw back in 2022, which is obviously a worst case scenario but shows you where sentiment is. Solana tends to be more correlated with risk on behavior, so when markets get choppy like this, it underperforms. The overall takeaway is that Bitcoin is your relative strength leader in crypto right now, Ethereum is stuck in the middle, and Solana is struggling. If you're trading crypto in this environment, Bitcoin is where the institutional money is flowing, and that's the trend you want to be aligned with.
Well, that wraps up today's Morning Bell. The markets are clearly navigating some challenging conditions with geopolitical tensions, mixed economic signals, and selective strength in certain assets. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell and join us tomorrow as we continue tracking these developing stories. I'm Robert, along with Lizzie and Steve, wishing you a profitable trading day.